He thinks the 2020 crisis will be bigger than the one that we had in 2008, and it will be similar to the Great Depression in 1930. I want to let Dalio explain it though.
Well, I think you could look at this like a tsunami that's hit the virus itself and the social distancing, and then what are the consequences in terms of the wreckage when you look at it. And I think you have to think of that as incomes and balance sheets, you know? So it was a tremendous income hit. And then the balance sheets, losses, and who has what savings and so on. And then how is that dealt with? And in order to understand that, you have to realize that there are these holes in income and the holes in the balance sheets. And then you have to realize that there is the production of money and credit. And who produces that money and credit? Okay, the money and credit comes in different flavors. There is US dollar money and credit. There is euro dollar money and credit. And so when you look at the world and you're seeing a situation that is the same as existed really in the 1930 to 45 period, in that now we're seeing the production of a lot of debt, a lot of borrowing by the government. We're seeing zero interest rates and not the traditional kind of monetary policy, but the producing of a lot of money and credit. So the Federal Reserve is buying the Treasury's debt, and the Treasury is getting that money to mostly Americans in some imperfect but remarkably large way. And the Europeans are doing the same in their way. That bank is a smaller bank because the world lives with about 70% dollars and only a small percent euro, and they will produce theirs for theirs. And there aren't many banks around the world. And so the rest of the world is going to have gaps, holes that won't be filled. So if you think about that and you say, American printing of money and the borrowing will leave us with a lot of debt and monetization. That's something interesting to talk about. And we need to talk about that. Who will pay these bills and how will that be shared will be something we need to talk about. But you will know that you will get that money and that the Europeans will get their versions of that money. But we are in a new world. And that world is most similar to the 1930 to 45 world. And a lot of the world will not get that money and credit.
So what you need to understand is at the moment, we currently have a lot of debt on our hands. I mean, as of 2020, that figure is sitting around $25.3 trillion. That's about 107% of GDP. We need to ask ourselves, with all of this debt on our hands, with all of this printing of money, who at the end of the day will pay the bill? How will this all turn out? And before you can answer these questions, you need to know how the economy works and the key patterns that we can see throughout history. I want to let Dalio explain it very simply.
If I can take a minute, I'd like to just paint a template for you that takes us, over the last 1,000 years, the things that have happened over and over again. There is one pattern that I'd like to convey. May I take a moment and do that?
Absolutely.
There are four things that are the driving forces of our economy and our lifestyle and wealth. And the first and most powerful is productivity, which comes from people learning and inventing and doing things well, just as Marco described. Okay? And it grows slowly. 1 or 2 or 3% a year, it grows slowly, and it's not volatile because knowledge isn't volatile, but it grows, and that raises our living standards over a period of time. Then there's a short-term debt cycle. The short-term debt cycle is, recessions and expansions and booms and recessions, that they last about 8-10 years. And then there's a long-term debt cycle. And that long-term debt cycle, which goes on about once every 50 to 75 years, is when you begin a new type of money and a new type of credit. That began in 1945. The New World Order at the end of World War II, and with the Bretton Woods monetary system, created a new monetary system in 1945, a new money. So they wiped out pretty much the old money, or they largely disposed of it, and they began anew, and that's the New World Order, which was the American World Order, and we have seen it, and still 70% of the money and credit that exists in the economy is running by dollars. And what you have traditionally is the breakdown. And then the fourth influence is politics. And politics is largely how we deal with each other. And there's internal politics and there's external politics. The internal politics is, how do you deal with the wealth gap? How do you deal with the values gap? Do you have a common mission? Do we have an American dream that we can agree on and that we're pursuing that together? Or do you fight over wealth and so on? And so when you look at history, that's what revolutions are in their various ways. And there's always a revolution in one of these. Sometimes those are peaceful revolutions, and so sometimes they're disruptive. But it's a wealth shift that needs to take place. So the Roosevelt shifted policies and changed taxes and so on in that way. And then in other countries, there was the turning over democracy. Hitler came to power because of that gap. So how people deal with each other internally. There's also external politics. So that politics means between countries. And you have a situation when there's a rising power challenging existing power. There is competition and there is a risk of war. And so how they deal with each other, so that whether there's a greater good or whether they are fighting with each other, is the defining moment.
So what you need to understand is that right now, at least in the short-term debt cycle, it appears that we are coming to the end of that cycle. This is a graph of the Dow Jones history, which gives us a good indicator for the entire American market. As you can see, it's been 12 years and we've had that strong bull market run. But then, if you pull this graph back 70 to 80 years ago, we get a better look at the long-term debt cycle, which, as Dalio said, on average tends to last around 50 to 75 years. Now, the bad news is that it has been exactly 75 years since the start of this current long-term debt cycle that we are in, which started in 1945. That's a strong indicator that things might be about to change. But the question is, what market conditions can we expect in the future? Again, I'll go to Dalio. He thinks that we are in a similar situation to that of 1930 to 1945. Why? Because the ingredients are exactly the same, with debt on our hands, low interest rates, the vast printing of money, etc. And the bad news is that this period wasn't exactly the most fun or profitable period to be in for investors. As you know, we had that Great Depression, and from then on, it was quite volatile. So now the question should move on to, what should we do with our investments during this time? Again, let's go to Dalio. He said the worst thing that one can do is think that they can time markets. So what the individual investor needs to do is know how to diversify well and in a balanced way. And for this, he created something which he called an all-weather portfolio. This portfolio is supposed to be able to weather any economic season and still do well. It accounts for 30% in stocks, and Dalio, he likes to use ETFs as his way of exposing himself to the stock market. ETFs in the USA, but also world ETFs. This way you can make sure you diversify your net worth through countries around the globe. Then it's 40% in long-term bonds and 15% in intermediate-term bonds. Also, you've got 7.5% in gold, which is another thing that Dalio alluded to recently. He says if you don't own gold, you know neither history nor economics. And lastly, 7.5% in commodities to finish off this